Hello, this is Patrick with Portland Apartment Properties. I'm a commercial broker for Keller Williams, specializing in multifamily properties and apartments. The reason I'm making this video is just to give a quick explanation of my apartment calculator I made up. The reason I made up the apartment calculator was I wanted a quick way to value apartments. When it was done, I thought other people might like it, so I'm just giving it to people to allow them to use it for free. Go ahead, download it from the web page, post it onto your phone, post it onto your desktop, and give it to your friends. How do you get it onto your desktop? Just drag this link from onto your desktop, and you now have the small version to put on your desktop. I made it small so you can put it over here to the side and work on your real work here and have the calculator off to the side. Another way would be to click this copy link to clipboard. This gives you the link to the calculator. You can hit Control C, or you can right click on your mouse, hit copy, and then let's say like you can open up, I'm going to open up Google Chrome and paste it into Google Chrome. You can also paste it into an email and email it to yourself to get it onto your phone and save the link as a favorite on your phone. I'm going to shrink it down. So how does the calculator work? What you're going to do is, let's suppose I've got a 20 unit apartment I'm trying to value. Let's suppose it's got 10 units at $1,000 a month in rent. And let's suppose I got 10 units at $800 a month in rent. What's the value of the apartment complex? I hit this button that says get monthly earnings, and it's going to take the quantity units times the monthly rent plus the quantity units times the monthly rent, and it gives me a monthly earnings of $18,000. If I have an expense ratio of 0.45 and a cap rate of 6%, I click my Get Property Value button, and it tells me my value is worth $1.98 million. If I go over the Financial tab, shows me that I've got a purchase price of $1.98 million. I've got a down payment of 25%, which is $495,000, and I got a monthly cash flow of $9,900 after expenses. If I have an annual interest rate of 5% and a loan amortization rate of 30 years, and because it's a commercial building, I have 39 years of depreciation, I hit my Get Finance Values, and tells me my monthly payment on my loan will be $7,972. My debt coverage ratio is 1.24, an annual cash flow of $23,138. I've got estimated annual depreciation of $50,769, and a cash-on-cash return of 4.674%. This depreciation, what this number is telling me is that the property is going to generate me $23,000 a year in income, but I've got $50,000 in depreciation, which means that I might have $27,000 in depreciation tax savings that I might be able to apply to other income. Please talk to your CPA or accountant to determine how that might play in your actual scenario. That's basically the calculator in a nutshell. But let's go through some of the other features of what you can do with it, especially like with what-if scenarios. Let's suppose we're looking at the same apartment complex, but it's a newer complex where my expense ratio is going to be 0.42 instead of 0.45, and my cap rate is going to be 5.5. If I get property value, now it went from 1.98 million to 2.277 million as far as the value. Or let's suppose it's an older property, and I'm going to be running an expense ratio of, let's say, 0.5, and I want to be running a cap rate around 7 because I know I'm going to have to put a lot of money into it to maintain it. Now that puts the property at 1.542 million. Financials, same scenario. Let's suppose instead of 5%, I'm going to hit the new finance values. Let's suppose instead of 5% interest rate, which is generating me 8.674%, let's suppose I'm able to get a loan at 4%. Now all of a sudden my cash on cash jumped up to 10.8%. So you can change the values and play a lot of what-if scenarios. So some of the features of the calculator, I've got all these cells in gray. Expense ratio, cap rate, annual interest rate, loan years, depreciation. Let's suppose I want them to be standard. I know I'm always going to get an interest rate of 4%. I only like, let's say, 0.42 expense ratios because I know I'm going to manage the apartment real well, and I only like cap rates that are above, let's say above 6.5%. If I hit save defaults, what that's going to do is every time I open up this calculator, these same defaults are going to pop up in the gray areas. So let me close out of this. I'll reopen it. Let me post my link back in. And now you'll see that my defaults are 0.42 on the expense ratio, 6.5 on the cap, and 4% have all come back in. If I decide, gee whiz, I don't want these defaults, I want the factory defaults again, hit the reset button, and all the factory default numbers came back. Let's suppose that I'm sitting here doing an apartment calculation. Let's suppose I got 10 at 1,000, and I got 10 at 800. Let's suppose I also got another 5 units at $500. They're studios or something. Get monthly earnings. It's now $20,500. Get property value. So now we're 2.255 at 0.45 and 6% cap. And I say, okay, I want to value something else. Hit the clear. The clear button eliminates all the white cells and puts them all to 0. And that is about all there is to the calculator. Oh, one last thing. This button here multiplies this cell by this cell plus this cell by this cell all the way down and puts into this value. But let's suppose I don't know what the monthly individual rents are, but I do know that the total complex generates, let's say, $14,000 in monthly income. I can grab the total value based on these 3 numbers. So I can adjust any of these numbers and hit get property value. It's going to recalculate from just these 3 numbers. Same thing over here. I can change the down payment to whatever I want also. And go from there. So hopefully this was helpful, and you have a great day.